Good afternoon, traders. Welcome to the More Analytics Afternoon Energy Podcast for July 10th, going into the 13th. Hope everybody had a good week trading this week. Going to start off with the natural gas. Okay, we've been bearish overall from $8.20.8. We'd seen $6.68.6 to the downside. A lot of other bearish calls in here. More recently, we held exhaustion with a 339.60 high and have rolled over to 287.40. More recently, we'd broken below this formation right here after running back up, trade below 331.40, got us bearish, then below 312.30, excuse me. And then again below 309.30, and that has brought in pressure down to 287.40. I warned this morning that we may be in the last stretch of the move down from 442.50 with areas of possible exhaustion at 286.40 to 540 and then 270 and lower. These are our macro areas of exhaustion, and we came down to within just a hair of this at 286.40 with a 287.40 low and started to bounce to 295. If this was to further settle on Monday back above 3 even 10 to 3 even 20, that would further warn of an entry into a bullish correction against that move down from 442.50. In the crude oil, I'm not going to go over all the higher time frame stuff. The break above 67.91, I said warrants a decent strength. We saw $8.17 of that. Tuesday, we left a minor bullish reversal below. We rallied $5.36 from the 70.72 open. And then on the 8th, we left a medium bullish reversal below that warrants a higher trade for days/weeks. I did say, though, that said, the Brent is still bearish from yesterday's breakdown and continued to come off today. I would also note that the heating oil left a minor bearish reversal above that we'll take a look at in a minute. A maintained gap lower on Monday will leave a minor bearish reversal above, which will also negate the medium bullish reversal below and will warn of pressure likely to head back down to test 67.03 and likely below that. I would also note if that does happen, we'll likely be in the last stretch of this move down, and there is a major area of possible exhaustion to contend with, multiple levels from 64.97 down to 63.45. So if you are short, I would definitely, when it gets down there, I'd definitely be paying attention. Now the break below this, a decent break below this line, which is going to come in at 66.21, minus 1.3 per hour, starting at 6 o'clock p.m. Sunday. Actually scratch that. That would not be a short below there. Okay. On to the RBOB, or unleaded gasoline. We left a minor bearish reversal above on the day. Let me back up here and give a little background. I'm not going to go over all the higher time frame stuff. The trade above 287.06 warned a decent strength. We saw 29.16 cents of that. Trade above 295.75 brought in 20.47 cents. Monday, we left a medium bullish reversal below that warned a higher trade for days in general, for days/weeks. We rallied 18.69 cents from the 297.53 open. And then the trade above 301.16, I said projects this upward 7 cents minimum, 30 cents plus maximum. We've obtained 15.06 cents of that so far. All those are on hold as we held exhaustion above with a 316.22 high and rolled over 19.34 cents coming into today. And then we've also negated this projection to the upside, which was on hold, We got 15 cents of it, but that is now negated as we broke below that formation today. And just to back up, I said that we held this exhaustion up here with a 316.22 high. I did not suggest selling against that specifically, but on the fade back below 315.51, I said to get short. Now I said to get short at a decent penetration below 3 even 21. So we broke below there this morning and further broke below this other formation as well. Decent trade back above this formation, which is going to come in at 3 even 01. Minus 2 per hour starting at 6 o'clock p.m. Sunday. That'll warrant decent strength. But like I said, on the day itself, we left a medium bearish reversal above. A minor bearish reversal above. The medium bullish reversal below is still intact, although it's on hold now. If we leave a maintained gap higher on Monday, that'll negate the minor bearish reversal above, take the bullish calls from below off hold, and accelerate this to the upside. In the heating oil, I'm not going to go over all the higher time frame stuff. The trade above 320.04 projects this upward 6.75 cents minimum, 25 cents plus maximum. We've attained 57.1 cents of that. The trade above 317.53 brought in 59.61 cents. The trade above 324.15 brought in 52.99 cents. And then the trade above 327.58 brought in 49.5 cents. And the trade above 354.53 brought in 22.61 cents of strength. Decent failure back below that upper line will warrant decent pressure again. That line's going to come in at $355.67 plus 2 per hour starting at 6 o'clock p.m. Sunday. A maintained gap lower in there would leave a minor bearish reversal above, but that'll be more effective if/when we take out 332.21 in the process. Okay, in the Brent, a maintained gap lower on Monday would leave a minor bearish reversal above on Brent. But let me give you some backup in here. I warned the 69.38 to 67.80 general area as a final area of possible exhaustion on the downside. And if we hold this and begin a new bull structure, it could be significant. We came shy of that with a 70.14 low and rallied $10.45. The maintained gap higher on July 7th left a minor bullish reversal below. We rallied $7.80 from the 72.79 open. And then the maintained gap higher yesterday left a medium bullish reversal below. Those are all on hold, however, as we broke above this formation and back down through it. That was the break below 79.33, which warned of pressure, and we have seen pressure down to 75.30. Decent trade back above that line will negate bearishness and reestablish bullishness, and that's going to come in at 79.61 plus 0.6 of a tick per hour starting at 6 o'clock p.m. on Sunday. And the cadence going into Monday is the RBOB is the weakest of the three, the heating oil in the middle, and the crude the strongest of the three relative to one another. I'd also note we left a maintained gap lower in the RBOB crack today, and a maintained gap lower on Monday will leave a medium bearish reversal above in the RBOB crack. And I also stated we left a minor bearish reversal below in the RBOB to heat a couple weeks ago, and then a medium bearish reversal above 3 days ago, which has been seeing some of that pressure. Okay, I hope you have a great weekend, and I'll see you in the next podcast.